Hello, everybody. This is Jim Hiles. Welcome to Financial Friday. We're going to look at the U.S. stock market, do a quick review. It is September the 3rd. Leaders and laggers is what we're talking about here. We're looking at sectors, so it's kind of a broad view of what's going on. When you look at a chart like this, it shows you a trend. This is a 3-year time period. And generally, we're comparing it against the S&P, meaning if you have an upward slope, that sector is outperforming the S&P. So that'd be a place you might want to consider investing in. And the contrary is true as well. But let's look at a couple of them right away. We've got technology. You can see, by the way, a couple of observations, and no surprises here. I don't think someone has been following, but if you haven't, really a super track record, 19 and 20 in particular, particularly through COVID. Technology did great, but it's been pretty sideways this year. Matter of fact, a lot of talk about the growth and value trade kind of flip-flopping, the value becoming back, and just hasn't happened yet. That is a cyclical trade, which we're still actually looking forward to a lot of the value stocks to perform, a lot of the cyclical stocks. But technology is still where you got to have a bunch of your portfolio, and it has come back and actually gone back to all-time highs. So again, we think that is a good place to be. Financials have also been fairly strong. They were extremely strong earlier this year. They've actually sold off a little bit, but we think that trend is still intact and will probably continue through the rest of this year into next year. A little higher interest rate might help these guys, but they're still relatively inexpensive in relation to the rest of the market. On the other hand, one trade that we thought we'd actually be doing a little bit better on was the consumer discretionary. You're basically looking at people spending money on stuff. It's been relatively downward in relationship to the S&P. In other words, you would put your money in the S&P, you'd been better off than trying to guess being in consumer discretionary. A lot of this has to do with the reopening trade, and people just aren't spending money like we thought they would in particular. So I don't think the COVID experience has unleashed the buying power yet. I don't think the money that the government has thrown out to the market has been spent yet either. So there's still upside potentially here. Maybe this little spike up you see toward the last couple of months is going to be helpful. But I think if the COVID experience kind of winds down, maybe these discretionaries come back. Utilities relative to the S&P, don't bother. This is generally a defensive trade. It's been risk on, and we are currently risk on. If you look at leaders and laggers, the scoreboard, you get a feel for what we like to invest in. We generally like to be in the trend that is leading or at least advancing against the S&P. Trend is your friend. Keep your winners, sell your losers. I mean, those are just two classic Wall Street types of sayings. Basic stuff, but it's true. And you look at technology, still okay. Financials would definitely benefit from higher yields. Communication services have come back a little bit recently. Long bonds are still hanging in there. And again, we have no real movement from the Fed from an interest rate standpoint. Same thing with Treasury securities. And here's a good one, junk debt or high yield. These are bonds. This is a great place to get equity type risk, but at a lower risk profile than potentially stocks. So we kind of like junk debt right now. We like credit right now. So here's a good place to see some return if you're willing to take some risk. Emerging markets, I think maybe because of the dollar perhaps falling back a little bit, emerging markets might be coming back on, but it's not the same old emerging market from a year ago. It's not necessarily China-led from an investment standpoint. So those are the things that we're liking right now. If you want to see more about how this actually works and see our work in action, we have something called Sector Select. It's a portfolio that we actually do what I just went through, where we are owning specific sectors, excluding others. I've done pretty well by eating your own cooking here. So Sector Select is generally you're putting your money in 4 of these sectors based on the indicators that we use to pick the sectors out there. It's kind of a longer term trade that we like to see kind of in the portfolio to get U.S. equity exposure. It's 100% invested all the time, just which sector to be in. So if you want to learn more about how that works, or if you have it in your portfolio, you want to go through it, please feel free to give me a call. And it is Labor Day weekend. I'd be remiss in not wishing you a happy Labor Day weekend. Enjoy it as we wind down summer. It's 75 degrees out, beautiful right now, but it feels like fall. We'll talk to you all soon. Take care.